Hi everyone, welcome back to Be Rich. It's me, Vinod, recording remotely from Bangalore still. Today is Sunday and I hope you're doing well. It's Sunday evening. So I wanted to take up this opportunity since the markets have been closed for the last 3 days to talk about sipping and investing and what is happening with retail investors in India. And recently an article came in Mint which spoke about how recently, in this current month that is, and since last month, there has been a slowdown in sipping from investors. New account for investing opening has slowed down, and actually in this last month, so far this month, that is the month of March, the retail investors have been net sellers. That means they've already 13% sale they've been looking at tracking so far this. That means retail investors are more and more looking at withdrawing funds from the market. Why is this happening? The main reason it's happening is the volatility which we've been seeing in the market has slowly started turning into fear into retail investors. A lot of you young retail investors who started investing in the market after the COVID crash have all been expecting recoveries to be fast. That especially during the COVID crash when it happened, that was an unusual time. It wasn't because of an economic condition. It was due to a global pandemic. The market crashed and it recovered very fast because underlying economic situation in the country and the globe hadn't predominantly changed. So once we understood what the lockdowns were, the pandemic was, slowly recovery also came in swiftly. But this time the case is not such. So a lot of retail investors who have been investing in the market have been hoping that this will suddenly bounce back and things will start looking rosy again. And more there seems to be uncertainty and volatility is increasing. Volatility for any value investor is a friend. I've said this in a previous video. Why is volatility a friend? Volatility is a friend because it gives you opportunities to stocks and companies which were priced out for you before. They come into valuations which are acceptable, which are considered normal, more down to earth, and we start looking at consolidating on these stocks. But this is not true if you do not know what you're doing, especially if you're in active mutual funds where you really do not know how it's being invested, how the money is being moved. So that starts getting you nervous because the returns you were promised suddenly evaporate and the clauses come into condition where they said these were not guaranteed returns, these were expected returns. Unfortunately, the market conditions have turned sour, so we cannot give you these returns. So these actual mutual fund managers, active mutual fund managers start telling you, sorry boss, it's not happening the way we thought. This leaves a lot of SIP investors who have been investing in mutual funds a little shocked and taken aback because there's little they can do other than sell and move out because they cannot control how their funds are invested on which equity or which shares they're buying or how much they're buying. They cannot say, you hold this company, I want you to hold that company. It becomes very apparent in the active mutual fund game that the manager, active fund manager, is God Almighty and he or she gets to decide how the funds are distributed and when to distribute. Like Anand has been saying for a very long time, active fund managers being under severe pressure to show performance and to show returns have been actively gambling in the market by moving funds from here to there and trying to scrape here and there profits, hopefully to secure enough profits to keep the investors happy. The case in point now is it's become more and more difficult to do that as FIIs have been putting enormous pressure in selling. They don't seem to be really interested in entering the market in great numbers right now. The DIIs have nobody else to play the game with. All these years, what's been happening is every time the FIIs sell, the DIIs buy. When the FIIs decide to buy, the DIIs sell. So this back and forth which has been happening has been giving very sweet profit and easy profit. As they say, the cream of the top has been taken out and returned to investors after they scoop their profit out. But this game of back and forth has come to an end and it's been slowly coming apart in the seams. That coupled with the fact that retail investors have been themselves seeing the news in the market and what is happening with Trump and in the US and seeing the stock market moving severely in the negative, in the red, month after month, has been putting more pressure on these active fund managers to secure these accounts. Not been happening. That's why I told you they've already become net sellers and fresh accounts are not opening. So what does this mean for value investors like you and me? Well, this goes back to what Warren Buffett says. This is where you have to show that you have faith in yourself and you have faith in all the efforts you've put in so far. You've been waiting during all this bull run and all this bull time. You've been waiting for an opportunity to enter the market. Especially those of you who missed the COVID crash, who thought, okay, I missed it. There's no way I can enter the market now that you have been having a bull run for a long time and seems to be going on forever and ever. Well, nothing lasts forever. That is very apparent now. And now here's your opportunity which has come to present. So what do? This is where, like I said, you have to have faith in what you've been waiting for, and you have to invest steadily and slowly in the market, because this is going to be a prolonged correction which is not going to go away anytime soon. If anything, you're going to have many dead cat bounces where it look like we are out of the woods, then we'll be pulled back down again. This is simply true to the fact that even if inflation numbers soften, even if the Fed cuts interest rates, geopolitically speaking, things are not very great. With the tariff wars which have unleashed, the inflations are going to start ticking up again in the US. It's just a matter of time, unless suddenly all the world comes to its senses and they realize we are too interconnected now. Our economies are too interconnected. Our trades are too interconnected to abandon each other and say, I will not allow you to enter my country. This is even true for India. That's why the Indian government itself has now softened its stance on tariff, and it's trying to negotiate something which is feasible for both sides of the equation, so that both sides feel satisfied where the tariff rates are sitting. So this is an opportunity as an investor to invest. If you've been waiting, like I said, whatever companies which you've been waiting for some time, if you see it come into prices which you are finding acceptable and valuations which you deem are reasonable, you should definitely look at investing. If not, gold is always there. And let's say you are a person who's been sipping all this time and suddenly you've come to a pause. I'm sorry to say, this is not the time to pause. If anything, this is the time to continue sipping as best as you can and continue investing and ride this bear market through. If you try to cut your losses short and withdraw, you will probably be scarred so bad that you will not come back to the stock market and never invest again. And stock market, if done right, if done correctly, great way to create wealth in the long term. This is one of the methods I'm saying. It is not the only method to create wealth, but it's a method which is accessible to everybody in all strata of society, and is pretty democratic in the way access is allowed and profit is allowed to be made, as long as you know what you're doing, which is what the key element in this is. So you will hear more and more stories about this, how investors are withdrawing from the market, how you will see accounts are not being opened anymore in the market, and people should be investing in the market. If you've been part of our group and you've been following us for some time, we'd already know this is a great opportunity, and a kind of opportunity you've been waiting for a long time. The so-called patas list, which you have always been holding on to, has now started to grow quite rapidly. More and more companies are entering into ranges where they're not diamond needles anymore. These are great companies coming to become normal needles. Some of them even become so cheap, you can call them not even needles anymore. They're like literally throwing away the baby with the bathwater. So I don't want to mention company names because I leave that up to you to decide. As you get on to tomorrow, which is on Monday, is another day to invest in different coffee range. As I always say, take in small increments. Please do not go drop the whole coin in the market in a single shot. Do take your time, invest slowly and wisely. Like some of you during the correction which we saw in IndusInd Bank, on the first trigger went and dropped everything thinking this is a massive chance, then saw another trigger and got FOMO and dropped some more money which you shouldn't have been dropping. Then it went into the third trigger and you started feeling really bad about it. Please do not do that. If you've invested for the day, log off and move on with your day. Stop following stocks and tracking stocks throughout the day. That is not the way to invest. Let me reiterate this again, because it's very important to invest in incremental small steps and not in huge sums. If you have a lump sum which you would like to invest, I would suggest that you look at gold for the short term. Otherwise, look at bonds, invest in bonds and take the interest from these bonds and invest steadily in the market rather than putting a lump sum in the market. That is highly unadvisable in this current scenario. Anyway, I wish you a wonderful week ahead. I'll see you again tomorrow with another video with more market news as the markets open on Monday morning. Thanks for watching. Be rich. See you again soon. Bye.